Welcome to the Hurst Trading Room. My name is David Hickson and this is a video update for the 8th of June 2015. As always, before we take a look at the markets, please make sure that you have read and understood these disclaimers. If you are watching this video anywhere other than on our YouTube or iTunes podcast channel, then make sure that you subscribe, and that way you will be notified when a new video is made available. However, as a user has recently pointed out, the best way of being notified about new videos is by means of following us on Twitter, because those tweets go out literally a few seconds after the video is uploaded to the podcast channel, and so it is by far the quickest way of being notified of a new video if you follow us on Twitter. Let's take a look at the markets, and I have a tremendous amount to say today, so I apologize in advance if this is a slightly long video. I've been traveling over the last 2 weeks. I had the great privilege, as a matter of interest, of standing in the room where Antonio Stradivari made his violins in Cremona in Italy, but that's another story for another time. Very good investments, as a matter of interest, antique violins. But let's take a look at the stock markets, and I'm going to take a look at the US markets and then also the DAX, and if we have some time we'll quickly take a peek at the FTSE100 as well, and then we'll quickly update ourselves about the euro to US dollar. Here's the S&P 500, and as you know, there are two possible analyses, in my opinion, that are playing out at the moment. The one analysis places the 80-day cycle trough over here in the first week of April, and that analysis expects the 40-week cycle trough to be forming fairly soon, round about now. So we're looking at the market bouncing out of a 40-week cycle trough soon. Obviously, the trade that we would be looking at taking next, according to this analysis, would be an A category long trade as the market bounces out of that 40-week cycle trough. Let's quickly zoom in and take a look at the 20-day FLD and just go through that sequence so that you understand that. Here is the A category interaction following the 80-day cycle trough at the beginning of April. Price came down to the FLD, tracked along it in a very typical manner for the B category and then C category interactions. C category interaction, of course, is where the price bounces up above the FLD again. Then it crossed down below the FLD in the D category interaction. A slightly difficult interaction, a messy interaction, because it crossed down below the FLD, bounced back up to the FLD, and then came down to form the 40-day cycle trough. Very difficult interaction to trade profitably, although most profits would probably have been taken from that first cross down over there. Here is the E category interaction, and that is, of course, when price bounces out of the 40-day cycle trough. And here is the F category interaction as price came down below the FLD. Price came back to the FLD, tracked along it for 2 or 3 days in a G category interaction. And the H category interaction is, of course, as price drops down from the FLD, falling into the 80-day cycle trough, 80-day at least cycle trough. In this case, we're expecting it to be a 40-week cycle trough. And so our next trade would be an A category long trade. That looks good to me. That's a fairly textbook sequence of interactions between price and the FLD. A few sort of messy interactions, but that is to be expected. The markets are not perfect. The FLD trading strategy is not entirely black and white. You have to apply some advanced human intelligence to the process of identifying your interactions. And so this is a very typical sequence of interactions, indicating that the next interaction is an A category long trade. Now, this is one of the possible analyses, and let me just get rid of that FLD. let's quickly take a look at the other possible analysis, which tells us to expect the 40-week cycle trough later. That's the big difference between these two analyses. In this particular analysis, you can see that the 80-day cycle trough has been phased as occurring here in the first week of May, right at the beginning of May. You can see I've had to pin that, so in other words, I have influenced Sentient Trader's analysis and asked it to position that 80-day cycle trough over there. What that means is that the 40-week cycle trough is expected slightly later, as opposed to expecting it now. We would expect the 40-week cycle trough to occur in about the middle of July. That's a slightly staggered nest of lows, as you can see. Doesn't mean that it is definitely wrong, but it does slightly reduce the possibility that this is a correct analysis. Another reason why this analysis is not really my preferred analysis at the moment is what has been happening with price interactions with the 20-day FLD. So let's take a look at that, and you will see what I mean. Here is the A category interaction following the 80-day cycle trough. Price then came down to the FLD, sort of tracked along it for a few days, round about the time of the 5-day cycle trough maybe. Now that's slightly unusual. We don't expect that. We normally expect the A category interaction to keep price above the FLD for longer than 5 days. So that's not great, but it doesn't eliminate the possibility of this analysis. Then, of course, as price came down to the 20-day cycle trough, that is our B category analysis. And in my previous video, I spoke about the fact that this could have been a B category or an F category interaction that we were expecting. And price came down, as you can see, very strongly, made a really big move down in that first day. At the end of that first day, I was regretting not having got into that trade. I thought, because I'd stayed clear of it. I thought, there we go. That looks clearly like an F category interaction. However, the market had some surprises up its sleeve, because the very next day, price bounced right back up again to the level of the FLD. And so all of a sudden it looked as if though maybe it was turning into a fairly bearish B category interaction. But then price could not keep up with the FLD, as you can see. It dropped down below it instead of tracking along it. Not necessarily completely negating the possibility of this analysis, but certainly weakening the likelihood of this analysis. At that time, there was some interaction. I think it was on Hurst chat, or perhaps comments in the academy. I don't remember now, but there was some sort of questions about what's happening now. Is this B category? Is this F category? The markets kept us guessing. As I mentioned at the time, this very high range day on Tuesday. What Tuesday was that? That would have been the 26th of May. That very big range day. Provided us with a range of price, which, when it was broken one way or the other, in my opinion, would have told us, would have indicated to us which interaction that really was. In other words, if price had broken up above that range, then we would have said, that's the B followed by C category interaction. As it happened, price remained within that range for over a week. It was such a strong day, and the price movement in the week that followed really didn't tell us anything. It wasn't anything new. There was a lot of sort of movement up and then down and then up and then down. Price dropped slightly below that range the following Tuesday, a week later, and it then immediately bounced back up to the FLD, and then it came down, and finally on Thursday of last week it dropped, fairly decisively below that range. In my opinion, that makes the alternate analysis, in other words, not the one we're looking at here, the more likely one in my opinion, and so I think this was probably the F category interaction. It doesn't entirely rule out the possibilities of this analysis. Why? Well, because when price came down, and let me just clear that and start scribbling on this chart again with a sort of a fresh picture. So here is our A category interaction according to this analysis. Here could have been our B category interaction, and like most B category interactions, you can see how the FLD provided a strong attraction to price. Price, although it was moving with a great degree of volatility, it came back to the FLD. And now that's something you do often see at a B category interaction. Price wants to stick to that FLD. Is it impossible that that is a B category interaction? No, it's not impossible, but it is an indication of a market that is turning bearish, and that's important to bear in mind, in my opinion. If this is a B category interaction, then it is a B category interaction which is taking place within a very bearish environment. Not very bearish, but a more bearish than bullish environment. And so we need to bear that in mind. The C category interaction was then this move up here. Probably that move that happened last week on Tuesday and Wednesday. That was then the C category interaction. And it was a very weak C category interaction. Remember that an interaction is something that happens between price and the FLD. Usually a C category interaction, we see price crossing up above the FLD or simply pulling away from it to the upside. But the fact that price came up and touched the FLD is still an interaction. And in the context of this analysis, it is a C category interaction. It's an unusual C category interaction. It lessens the chances that this is the correct analysis, in my opinion, but it is not an impossible C category interaction. And that's quite important to bear in mind. Of course, then the D category interaction was the one where we saw price dropping down again as price moves down into the 40-day cycle trough. So if all this discussion of possible analyses and all the details is beginning to confuse you, please don't let it confuse you. The important thing is, what is the next trade that we need to make? According to this analysis, the next trade that we need to make will be an E category long trade as price crosses up above the FLD. However, it's very important to bear in mind that the sequence of interactions that we have seen ever since the beginning of May has been very bearish. Therefore, according to this analysis, that might not turn out to be a very profitable trade. What should you do? Well, it's up to you. You could decide not to take that trade. But in my opinion, the best approach is to simply take a slightly smaller trade. So don't put too much money into it. Risk less money than you would normally. That way, if it turns into a good, profitable, long trade, you can still make a bit of money, but you're not risking too much. The alternate analysis, and let's go back to that, which is now, in my opinion, the more likely analysis. It's important to point out. Let me just clear that pen. Let's just zoom in here a little bit and display this FLD. We want the 20-day FLD. According to this analysis, the next trade is also a long trade. It is an A category long trade, and it is expected to be a more profitable long trade. So our next trading opportunity, I believe, in the S&P 500, and in fact, as I will point out, in stock markets around the world, our next trading opportunity is a long trade. And according to some of the analyses, it should turn into a really good, profitable long trade. According to other analyses, it might be a slightly disappointing long trade. There's something else that I would like to point out, which can give us a little bit more sort of information about how profitable is this long trade going to be. Let's assume that price is going to bounce out of the 40-week cycle trough, which is of course what's expected by this analysis. So we're looking at a 40-week cycle trough forming roundabout now. The first thing that many people might say is, how can that be the 40-week cycle trough? Surely a 40-week cycle trough must be this really big, deep trough, like this trough that we see over here, where price plunges down for a long time into the trough and then bounces out again. Well, that was an 18-month cycle trough. So 40 weeks is only 1 degree shorter. 40 weeks is about 9 months. It's still a long period of time. So shouldn't we see a bigger move down into that trough? This is where Hurst cycles become really interesting, in my opinion. Many people look at Hurst cycles and they expect the market to go up for half the cycle and then to come down for half the cycle. Well, if you have that expectation, you are going to be continuously disappointed, because in fact cycles don't move markets in that way. It's one of the fundamental concepts that you need to get your head around when analyzing and trading markets using Hurst cycles, is that cycles don't move up for half the time period and then move down for half the time period. They also don't always move up the same amount that they move down. Sometimes you get a very nicely balanced cycle. Let's see if we have any very nicely balanced cycles on this chart. Well, there's a fairly balanced cycle, I suppose. You could say this is a 40-day cycle. You could say that price moved up for about half of the 40-day cycle period, and then it moved down for about half of the 40-day cycle period. That's a fairly balanced cycle. And you do find them, of course, in the markets. And you can see that the price moved up by about the same amount that it ended up moving down. Okay, there's some squiggles there that make it imperfect. But nevertheless, you do, of course, find balanced cycles. But most of the time, we are looking at cycles influencing price movement in a way that is not very balanced. And the reason for that is because of the combination of the multiple cycles that are influencing the price movement. And so it is possible that the 40-week cycle trough is going to occur at the level of Friday's low. That is possible. And we might see a bounce out of that trough over there. Okay, so it's not impossible that the 40-week cycle trough has formed, or maybe it will form this week. That is not impossible. It is not required that the market plunges down into a trough that looks as if though it has a 9-month significance. That's an important thing to bear in mind. When you're trading according to Hurst cycles, the most important thing is that you stand by and you are prepared for the bounce out of the trough. Fortunately, our two analyses are both recommending a long trade. And if you're trading using the FLD trading strategy, working with the 20-day FLD, then in fact it is, to all intents and purposes, the same trade that you're making. Whether it turns out to be a bounce out of a 40-day cycle trough or a 40-week cycle trough doesn't make a huge amount of difference in terms of your thinking process before you enter the trade. Of course, it will make a difference in terms of the profitability of your trade, but in terms of your thinking process before you enter that trade, it doesn't make a huge amount of difference. The important thing is that we've identified a long trading opportunity. But as you know, one of the analyses has potentially shown us the fact that the market is weakening, the bull is weakening, and things are beginning to turn to the downside. Now, if that is the case, then will price still bounce out of the 40-week cycle trough? Yes, of course it will. It will bounce out of the 40-week cycle trough, but it is likely to not be a very impressive and dramatic bounce, and then price is going to turn down again, and we're going to be left with what is called a straddled trough. Let's not discuss that in too much detail now, but just as we don't require that price plunges down very far into the 40-week cycle trough, it is also possible the price might not bounce very impressively out of that 40-week cycle trough. So we need to adjust our expectations potentially to what this long trade is going to yield. It might yield good profits, yes. The bull is still alive and well in the stock markets, particularly the US markets. The highest price that we have seen occurred only a few weeks ago. So, you know, the bull is not dead yet. But the bounce out of the 40-week cycle trough might not be very impressive. And as a matter of interest, let's just quickly take a diversion at this point and discuss our expectations for the formation of a long-term peak. Now, way back in November of 2014, that's where's that on this chart? that's over here in November. In fact, I think it was the 14th of November, I wrote a blog post. So when we were looking at market action before that time, I wrote a blog post about when to expect a very important peak in the markets. And in that blog post, I came to the conclusion that I would expect a peak to form in March of this year, 2015, a secondary peak to form in about May of this year, and another peak to form in about October. I expected at the time March to be the biggest peak, or the highest peak. In February of this year, I wrote another post. Let's take a quick look at it. Here it is here. It's called The Next Peak on the Hurst Cycles website. And I referred to the post that I wrote in November, and I updated my projection for when we're expecting a big peak in the market, or when I'm expecting a big peak in the market. And as a matter of interest, I compared various different analyses, and one of the projections that I made was this one over here. You can see that according to this analysis, I expected price to drop down into a trough around about, what's that, the first week of March, 9th of March or so. And indeed, price did drop down into a trough which occurred on the 12th of March. I then expected price to move up to a peak sometime early April. You can see price did move up to a peak, and let's just draw it. It occurred a little bit later than I had expected back in February. There's that peak which occurred slightly later in April. I was originally projecting up to early April, and finally I was projecting a final peak, or the final peak for a very long cycle up here in about the third week of May. I think that looks about the week of the 18th of May was, just according to my rough projection, when I was expecting that peak to occur. Of course, we did see a peak forming in there we go, in the week of the 18th of May. So that's that peak. My point is, and the reason why I'm speaking about this, is that for some time I have been expecting the markets to form a peak of a very long cycle, and the markets have been playing out very much as expected. You know, if you compare this chart, this was one of the possibilities for how the markets could play out as they moved up towards this final peak. And my projection back in February was for a final peak in the week of the 18th of May, after which point I expected the markets to come down and to move down and not achieve new highs. The reason I'm really emphasizing this point is that our trading opportunity at the moment is for a long trade. But in the back of my mind, as I make this long trade, I do believe it's very important to bear in mind the fact that the markets are in the process of forming a final peak. It's not impossible that the markets will rise up to new high levels, but they've been playing out very much as expected when looking ahead back in February. And my expectation then was for a final peak to form in about the third week of May, and a peak did form. So I think that's a bit of a warning sign. I'm certainly going to be a little cautious in terms of entering into these long trades. Now, let's take a look at some other things on this chart. And one thing I would like to speak about is the 20-week FLD. Now, normally, of course, I speak only about the 20-day FLD because I use the 20-day FLD to make trading decisions. And I find it a very useful FLD for actually defining entry levels. But price interacts with the FLD of each and every cycle that there is. And price tends to follow the same sequence for each of these different FLDs. I find the interaction with the 20-day FLD particularly reliable, but it does also follow the same sequence with the other FLDs. Now here is the 20-week FLD, looking back all the way to the 18-month cycle trough back in October. Now, of course, our sequence of A to H starts at the point of a trough of a cycle of 2 degrees longer than our signal cycle. So our signal cycle, or the cycle for which we plot the FLD, is the 20-week cycle. There it is in that stack of diamonds. And so we start the sequence at the trough of the 18-month cycle. So here is our A category interaction. Price came down to the 20-week cycle FLD and found support at that level before bouncing back up again. And it did that at about the point of the 80-day cycle trough, which, as you will know, if you have studied the FLD trading strategy, is something that does often happen. You get what's called a double BC category interaction. So that is an example of what I sometimes call a false BC interaction, which occurs at the cycle 1 degree shorter than the signal cycle. Then at the point of the 20-week cycle trough, we expect price to come down and find support at the FLD. Did it? Well, it kind of did. It dropped a little bit below the FLD, but then it bounced back up again. So it wouldn't be correct to say it found support exactly, but that almost certainly is the true BC category interaction. Then we expect price to come down into the 40-week cycle trough, and it will form a D category interaction with the 20-week cycle FLD. Now, do you notice what has happened here? Price came down to the FLD, pretty much found support, and then bounced back off it again. Came down, found support again, and now it's at a point where it looks as if it might be poised to cross below it. Do we expect it to cross below it? Yes, we do. Why? Because it is a D category interaction with the FLD that we expect next. And a D category interaction usually involves price crossing down below the FLD. But now, what's all this sort of messy interaction stuff that is happening over here? Well, the first thing that we should do when we consider that is actually change our chart to a weekly chart, which means that the bars that are displayed are weekly bars, and that is because we're looking at a 20-week FLD, and the resolution of the data with regard to the FLD works much better on a weekly chart. So let's draw that interaction again, and here you can see the A category interaction, a very good typical A category interaction, which fulfilled its target. That's the T2 target over there. Fulfilled its target very accurately, very nicely. Here you can see the false BC category interaction at the level of the 80-day, at the time of the 80-day cycle trough. Here is the BC category interaction. Do you see how on a weekly chart it looks like a good typical BC category interaction? Right, price comes down to the FLD, tracks along it for 2.5 weeks, and here is our C category interaction as price bounces back up above it. What has happened since then? Price has come down to the FLD and has found support at the FLD. It hasn't crossed down below it. It has done that on 2 occasions. It did it once over here, and it did it a second time over here. Now our 40-week cycle trough still lies ahead of us. What needs to happen before that 40-week cycle trough is formed in the markets? We should see a D category interaction as price crosses down below the 20-week FLD before the formation of the 40-week cycle trough. So this is an indication that indeed we are probably not going to see a formation of the 40-week cycle trough now in the first week of June, because we should see price cross down below the 20-week FLD. This is another point in favor of the fact that the 40-week cycle trough will only occur a little bit later, around about the middle of July, because we do expect price to drop down or cross down below the 20-week FLD. Does it have to? Is it impossible that the 40-week cycle trough forms when price is above the 20-week FLD? No, it doesn't have to. It is not impossible. And so this is an indication only, but it is a reason why I expect the 40-week cycle trough to occur a little bit later in July rather than the first week of June, which means that our long trading opportunity that we would be trading now in the S&P 500 as price bounces out of the trough that is likely to form fairly soon will probably only be an E category interaction as opposed to an A category interaction. Let's quickly take a look at the Dow, and I'm just going to go through these discussions a little more quickly because I've discussed all of the basics, and you can see that the analyses in the Dow and the NASDAQ and all of the other markets are simply variations of the analysis that we've been looking at in the S&P 500. So here is a very beautiful analysis, very clean. It's a default analysis. I've positioned the 18-month cycle trough over there. I could probably in fact get rid of that, but all of the price action since then fits very neatly into these cycles. Here you can see the 20-week cycle trough beginning of February, 80-day cycle trough first week of May, and here you can see the 40-week cycle nest of lows. In other words, when we expect the 40-week cycle trough to occur is in the middle of July. Is there a long trading opportunity in the Dow? Yes, there is. Let's display the 20-day FLD. The long trading opportunity in the Dow would be, of course, an E category trading opportunity, because here is the 80-day cycle trough. There is our A category interaction, and our B category interaction occurred over here, same as we were looking at in the S&P 500. This would be C, not a typical C category interaction at all. There's D as it crosses down below it. Here is the 40-day cycle trough. We are expecting an E category trading opportunity next in the Dow. Let's quickly also take a look at that 20-week FLD, a very useful FLD to be considering at the moment. And let's look at it on the weekly chart. And here you can see the same interactions. Here's our A category interaction as price broke out of, as price crossed up above the FLD over there. Here is another dummy false BC category interaction where price came down and found support at the 20-week FLD at the level of the 80-day cycle trough. At the time of the 80-day cycle trough, here is the true BC category interaction where price came down to the 20-week FLD, tracked along it for 2.5-3 weeks, then bounced back up above it in the C category interaction. Here again we find price coming down to the 20-week FLD, finding support. Here it did it again. What do we expect now? We do expect price to cross down below the 20-week FLD. Can you see price is pretty much right at that point at the moment? Okay, so we are expecting price to cross down below the 20-week FLD before the formation of the 40-week cycle trough, according to this analysis. As a matter of interest, is this typical that you see price coming down to the FLD and forming an interaction that we don't label? No, it's not typical. What does it mean? Well, it doesn't really mean very much, except that it is a further indication of the weakening of the bull. If the bull was still alive and strong, then you would expect the C category interaction to take price well above the level of the 20-week FLD. It wouldn't keep falling back onto it and finding support at the level of the FLD. It would stay above it before finally crossing down in the D category interaction. The fact that price has not stayed well above the 20-week FLD is an indication of the weakening of the bull that has carried this market for several years now. Okay, let's quickly take a look at the NASDAQ. In the NASDAQ we have two alternate analyses as well. Interestingly, they're slightly different analyses to what I believe is playing out in the S&P 500 and the Dow. Let's quickly take a look at this one. This one places the 20-week cycle trough over here, way back in January. That's slightly different, of course, to the other analyses. The trough that occurred around about Easter, the beginning of April, is only an 80-day cycle trough, according to this analysis. And then the May trough was a trough of 40-day magnitude, and so these last two troughs, of course, we have these last two cycle troughs, of course, we have in common with one of the analyses in the S&P 500. What is this analysis telling us to expect? Well, it's telling us to expect that price is coming down into a 40-week cycle trough round about now. So this analysis is in agreement with one of the analyses in the S&P 500, and it is, of course, expecting an A category long trading opportunity next. So it's not saying anything different. But let's have a look at an alternate analysis in the NASDAQ, which is fairly interesting in my opinion. The big difference here is that the trough that occurred just before the Easter weekend, the beginning of April, is, according to this analysis, a trough of 20-week magnitude. Now, this analysis works very well in the NASDAQ and is actually my preferred analysis in the NASDAQ. You can see the good clear M shapes that formed there for that 20-week cycle, and we've had a good clear M shape form so far for the 80-day cycle trough that has followed. What does this analysis tell us to expect? Well, it tells us to expect the same long trading opportunity in the NASDAQ. Not the same long trading opportunity, sorry. It tells us to expect a long trading opportunity, but a slightly different one, because here is our sequence of interactions. There is our A category interaction. Here is B, as price came down to the FLD, tracked along it. That's C. And here is our D category interaction, very difficult interaction to actually trade, as price crossed down over the weekend, as you can see, crossed down over the weekend below that FLD. Would have been an impossible trade to make, in my opinion. There's the E category interaction as price broke up above the FLD, also a tricky interaction. And here is the F category interaction as price came down, also tricky. There's no doubt about it. The NASDAQ has been a difficult instrument to trade recently. But what the analysis tells us to expect is the formation of an 80-day cycle trough. Now, we might see price coming up to the FLD in a GH, or it is just possible that the F category interaction in fact occurred over there, and what we saw over the last week or so was the GH category interactions. So I'm not holding my breath waiting for the GH. The long trading opportunity is presenting itself at the moment. As you can see, there have been 67 bars since the 20-week cycle trough at the beginning of April, and the average length of an 80-day cycle, as you know, is 68 bars. So the formation of an 80-day cycle trough now in the markets would not be a big surprise. And so the NASDAQ is also expecting or presenting a long trading opportunity. Let's cross the oceans and take a look at the DAX, the German market, and have a look at the analysis in the DAX. I spoke about this analysis in my previous video, and as you can see, I've done no influencing of this analysis. That always increases my confidence in an analysis when Sentient Trader performs it by itself. You can see there's a very shallow 20-week cycle trough here at the beginning of February, which it has in common with the US markets. However, it's a slightly questionable position for that 20-week cycle trough. It certainly is possible, and I mentioned earlier in today's video that because we're expecting the formation of a 40-week cycle trough does not mean that we have to see a huge plunge down into that trough. Well, there's an example of a 20-week cycle trough, which is a valid 20-week cycle trough, which had only a price move down into the trough, which lasted a few days. Well, it lasted altogether about a week, but only a few days in that week were actually down days. And so that is not impossible. However, I must say, you know, I believe in playing with an analysis a little bit and having a look at it. So yes, this is good, but I do have a question mark there. And so a more possible position, and I don't know if it's more likely, but another possible position for the 20-week cycle trough would be over there. And so in Sentient Trader, we can very easily do that. Simply create another chart and ask Sentient Trader to position that 20-week cycle trough over there, which it has done. Let's just zoom out a little bit so we have a similar scale on this chart. So here you can see the 20-week cycle trough over here. Only a slightly bigger move down as a matter of interest, only about 2 weeks move down into this 20-week cycle trough over here. So what does this analysis tell us to expect? Well, interestingly, similarly to the NASDAQ, you can see that the trough that's expected to form around about now is an 80-day cycle trough. And so, yes, we're expecting a long trade in the NASDAQ, an A category long trade, with price bouncing out of the 80-day cycle trough. In the other analysis, the default analysis, which might be the better analysis, but we could debate that at some length. But here you can see the 80-day cycle trough, the beginning of May, and price has now completed its first 40-day cycle. We're expecting price to bounce out of a 40-day cycle trough, and so that is, of course, an E category long interaction, E category long trade. So in the DAX as well, our next trading opportunity is a long trading opportunity. Either it'll turn out to be an E category long trading opportunity or an A category long trading opportunity. Let's quickly take a look at the FTSE. The FTSE is interesting. It's been very difficult to trade, in my opinion. I haven't done any trading in the FTSE for some months now, ever since this really volatile move over here. That frightened me when markets start doing that and they get so extremely volatile. I got a little bit worried. The cycles have been slightly difficult, in my opinion. There's been a tremendous amount of up and down movement, a lot of sort of insecurity in the markets. The best analysis, I believe, in the NASDAQ is this one over here, with the 20-week cycle trough at the beginning of March. And, of course, this analysis tells us there have been 89 bars since that 20-week cycle trough at the beginning of March. What is the next trading opportunity in the FTSE? It is also, of course, a long trading opportunity. And it would be an A category long trading opportunity, similar to the opportunity that we identified in one of the analyses in the DAX, and similar to the trading opportunity that I identified in the NASDAQ. An A category long trading opportunity. So I've already spent a really long time speaking about the stock market analyses. I do hope it's been interesting as opposed to confusing. And you're probably saying to yourself, okay, so what does all of this mean? What it means is actually very simple, and let me go back to a familiar chart rather than a chart of the FTSE, which is not really so familiar. Our next trading opportunity in stock markets around the world is a long trading opportunity. Of course, I will use the level of the 20-day FLD to determine the price level at which I should make that entry. It is either an E category long trading opportunity, which might not be a very profitable long trading opportunity, or it will be an A category long trading opportunity. But either way, it's a long trade. I would be interested in entering into this long trade. However, as I spent some time pointing out, I think we should be wary of the fact that the markets might have formed a very long-term peak already. And the markets have been showing signs of turning bearish. So I will certainly be setting fairly tight stops on these long trades and not risking everything I have. Let's take a look at the euro to US dollar, which has been wonderfully cyclical recently. And I spoke in my previous video, which was 2 weeks ago now. I recorded it on this day over here, and I mentioned in the course of that video that I expected price to come down during the course of that week and form an 80-day cycle trough. That is exactly what it did. It came down and formed a beautiful 80-day cycle trough, bounced back up again, gave us a fantastic A category long trading opportunity. Turned out to be a very profitable long A category trading opportunity. As you can see, that's our stop loss level, that's our entry point, and you can see price came up and achieved its target. It went slightly beyond that target actually, but it achieved its target very, very accurately. So the euro to US dollar is textbook Hurst cycles at the moment. It's really fantastic. And now that we have an 80-day cycle trough in place, we can take a look at the shape of that 80-day cycle and discuss what that shape tells us. There is the M shape of that 80-day cycle. It is bullish for two reasons. The peak occurred late in the cycle. All right, it occurred, what's that, about 5/6 of the way into the cycle, probably. So that's a late peak, which is, of course, the first sign of a bullish cycle shape. The second thing that we expect from a bullish cycle shape is a trough, which occurs at a higher price level than the price level at which the cycle started, and that certainly happens. So that is a good bullish 80-day cycle. Now, a bullish 80-day cycle indicates that the trough which formed here in the middle of March, which we're still not certain about the magnitude of, but the fact that we have a bullish 80-day cycle in place certainly increases the chances that that was a very long cycle trough that formed in the middle of March. What do we expect next in the euro to US dollar? Well, if it continues to behave itself, we expect it to come down to the 20-day cycle FLD, track along it a little bit, find support at the level of the FLD, and then bounce up again. So that will be a B category and then a C category interaction. Thank you very much for joining me in the Hurst Trading Room today. I wish you profitable trading and look forward to seeing you next time.